Now again, the next topic that we are going to take today is also related to the federal nature of the constitution. This basically relates to the fiscal federalism. Fiscal federalism means the rights of the states and the center in the fiscal domain, basically the domain of taxation. Fiscal and monetary are two important words that we need to remember, and you need to understand the difference between them. Monetary is related to money. Fiscal basically relates to taxation. Okay, the main goal is achieve money, but the nature of these two words is very different. Fiscal relates to the taxation, whereas monetary relates directly to the money. Monetary you can understand through RBI. Fiscal you can understand through the budgets presented by the governments. Okay, so what is important here is the Supreme Court has passed a judgment and stated that center and states have equal power to make laws related to GST. And this is one of the very important, like one of the most important decisions that have come in recent times related to the fiscal federalism in India. We'll try to understand what GST is, how it functions, what are the taxation powers of states and center, how GST subsumes a lot of taxation power of states into central domain, and what after the implementation of GST, what are the benefits, what are the losses, and we will try to understand all these aspects. Okay, it is going to be very interesting. I hope you will enjoy it. Now it is in news because Supreme Court says center and states have equal powers to make GST related laws, and it confirms the Gujarat High Court ruling that government cannot import ocean freight levy GST. The government the central government basically cannot impose ocean freight on certain that was coming for the importers. Now if you look at the fiscal domain of taxation, like fiscal domain, the tax domain, there are two kind of taxes: indirect taxes and direct taxes. Very important point to remember here is GST relates to indirect taxes. Okay, direct taxes mean income tax, wealth tax, corporate tax. Corporate tax basically companies pay करती हैं. Capital gains tax. Capital gains tax is the tax if you hold a capital for at least 1 year and you make a profit out of it, then your profit will be taxed. Okay, that is called capital gains tax. Securities transaction tax. If you are holding some securities like T-bill, shares, bonds, okay, and you are making some transaction, you are selling it or purchasing it, then there will be certain tax imposed upon the seller. Okay, because the seller is going to make a profit out of it. So these are direct taxes. Indirect taxes are, so direct taxes are those taxes which are imposed upon and collected from the person who is making that transaction. Okay. Indirect taxes are imposed upon someone and the incidence of that tax is on someone else. If you try to understand it, because there is a lot of confusion कि sir what is indirect tax, what is direct tax, तो इसको समझने के लिए it's very easy. Like if you are a person XYZ, ठीक है, you are making some income, okay, so government is imposing a tax upon that income and you are paying that tax to government. That is simply the direct tax. That is simply the direct tax. But there is a manufacturer of mobile phone, ठीक है, they manufacture a phone, ठीक है, okay, that looks good. They manufacture a phone, okay, so they sell it to the wholesaler. The wholesaler sells it to retailer, okay, and the retailer sells it to the customer. Okay. Now if we consider the manufacturing cost to be rupees 5,000, okay, manufacturing cost of the mobile is rupees 5,000. Now government will impose a lot of taxes on the manufacturer, basically like the tax on, like for example government imposes tax, ठीक है, then The wholesaler purchases and he also pays certain kind of tax. Retailer purchases, he also pays certain kind of tax. And then customer. So all these, the customer, this original value of the good was rupees 5,000. लेकिन customer purchases it for rupees 8,000. ठीक है? Why? Because sales tax. ठीक है? Taxes like octroi. ठीक है? And all such taxes have added up into the value chain. ठीक है? And such taxes have not been directly imposed upon the customer by the government. Okay, they have not been directly imposed by the customer, by the government on the customer, but at the end the customer is paying rupees 8,000 instead of rupees 5,000. ठीक है? तो 3,000 amounts to the tax. It is a very hypothetical situation. इतना 5,000 पे 3,000 tax कभी नहीं लगता. But I am trying to make a point here, and that is कि the tax was not imposed directly upon the customer, but the customer has to bear that tax, and that tax, the incidence of that tax, although imposed upon various different units within the value chain or logistical chain, that the customer has to bear such charges without directly being imposed upon. Such a tax is called indirect tax. It is as simple as that. Okay, such a tax is called indirect tax. Basically service tax. Okay, entertainment tax. Whenever you go to a cinema hall, you pay both service tax and entertainment tax. Securities transaction tax. Okay, securities transaction tax has been mentioned in indirect tax and direct tax as well, because the person who is making that transaction, he will be imposed upon a specific tax that is called STT, securities transaction tax. But for example, certain kind of people are facilitating that transaction. For example, Zerodha. Okay, it's an app which facilitates the securities transaction. In such case, Zerodha will be imposed a securities transaction tax, and it will impose that tax upon the customer. So that tax become indirect tax. Okay, value added tax, VAT, excise duty, sales tax, luxury tax, etc. All these taxes are indirect in nature. That means they are not directly imposed upon the person who pays them. Okay, rather they are transferred from one value chain to other. Okay, now we'll try to understand what is GST and how it works. GST basically is like one of the biggest tax reforms after the independence of India. Okay, GST is the biggest tax reforms after the independence of India, in the sense that it subsumed all the indirect taxes into one tax. Okay, and that made the whole country, because all these taxes in different states were different. The rate of these taxes in different states were different. Now the government has subsumed all these taxes, okay, all these taxes into one tax called goods and services tax. Now this is called goods and services tax, which is state GST plus CGST. That is state imposed GST and center imposed GST. This portion of the tax will go to central government, this portion of the tax will go to state government. That has made the whole country a singular market. Okay? That has made the whole country a singular market, because the taxes are decided by GST Council. Okay, although we'll understand how a specific decision that has come right now is going to change that scene. Okay, so basically tax rates, there are 4 tax slabs in the GST. क्योंकि for example UP में service tax कुछ था, there will be certain different service tax in Haryana, there will be certain different service tax in Delhi. So it creates a certain beneficial territory of taxation, right, within the country itself. Ki, for example, if there is a low rate of taxation on liquor, है ना, तो although liquor for human consumption and petrol and diesel basically are not under GST, but still I'm giving an example. Some states have a lower rate of excise duty on liquor as compared to the other states. So people might find it beneficial to get liquor from that state. Okay, so one state might be in competition with the other state to lower its tax. That may lead to the erosion of tax income. Okay, one aspect we can look into. But of course, now GST was subsumption of all these indirect taxes into one tax, and these taxes, one tax GST has four slabs of taxation: 0 to 5%, 5 to 8%, 8 to 12%, and 0 to 5%, फिर 12%, 12 to 18%, and 18 to 28%. We'll be dealing with that. Now, if we look as to how GST has helped us in removing the cascading effect. Now, cascading effect, we'll understand what is cascading effect in a very hypothetical situation. If we understand, this is previous system, okay, how the earlier system worked. Now, if we consider a hypothetical scenario where on every single step a 10% tax is imposed, okay. So if you consider 50%, or 50 rupees was the manufacturing, there's a producer, and 50 rupees, 50 rupees is the manufacturing cost, okay, and 50 rupees is what the profit of the producer. So it becomes 100 rupees, and then 100 rupees का 10% tax impose कर देगी government, ठीक है. So the cost of the product that leaves the factory gate becomes 110 rupees. Although the cost should have been 100 rupees, but due to the imposition of tax, ठीक है, it has become 110 rupees. फिर आया होलसेलर क्या करता है कि 10 रुपीज अपना प्रॉफिट रख के उसका कॉस्ट कर देता है 120 रुपीज, ठीक है. अब 120 का 10% इज 12 रुपीज, तो द कॉस्ट एड्स अप टू 132 rupees. Now you can clearly see that this 110, now you can clearly see that this 100 rupees was the cost at this gate factory, the factory gate, okay, and 10% tax makes it 110, okay. Now this guy, he made a profit of rupees 10 and its cost become 120, but government again imposes 10% tax and it becomes 132. Now if we look upon this, so 110 is equal to what? 100 plus 10 plus 10, this 120, sorry, into 10%, right? Now you can say that the original project is being charged at 10%, फिर 10% of 10%, 10% of 10%, and again 10% of 10 rupees. That means at the successive levels of the value chain, the original tax, now if this comes here, right, again you will have to write n into 10%. That means at every state, at every step, the original 10 rupees was again being taxed, again being taxed, again being taxed. This is called cascading effect. Cascading means adding upon. The tax is getting added upon. Now you can see again this, the value of the final product becomes 156.2. However, GST works in a different fashion. If we consider GST 10%, ठीक है, तो GST is a destination based tax. It is not a stepwise tax, it is a destination based tax, ठीक है. तो फिर again if 50 plus 50 is equal to 100, it will not be taxed here. Again this guy 110, again 120, and फिर यहाँ पे 130. अब 130 is the total cost of the good into, okay, into 10%. Why? Because the GST will be taxed only at the destination of the sale of the good or the service, at the destination of the sale of the good or service, not at every step. So 130 into 10 is 13 rupees, 130 plus 13 is equal to 143. 143 will be rupees 143 will be the cost of the good that the consumer has to pay. That means the cascading effect, every time taxation was 110 के बाद 120 की बजाय 132 हो गया, right? Because the tax was imposed at every step. Okay, now this has been eliminated by the use of GST, because GST is a destination based tax. GST is a destination based tax and not the source based tax or stepwise tax. Okay, I hope you understood how GST, what is GST and how it works. Okay, there are basically 4 slabs. The first one is 0% category, matlab untaxed, right? Again, the next one is 5%. The third one is 12 and 18%, and the fourth one is 28%. So the certain goods like luxury goods, okay, luxury goods, है ना, that have been taxed at higher, and some important accessories like some important medicines, they have been taxed at 0%. So a certain stability in the taxation regime has been provided. Okay. Now, what kind of GST and who can impose a tax? So the whole ruling is about the fact that the Supreme Court has said that not only the central government but state governments can also make rules regarding the GST tax. Okay. Now what happens is there is one GST Council. GST Council, okay, is a constitutional body. Now GST Council की advice जो है, it is advisory in nature. It is not binding. Okay. And GST Council recommends what kind of goods should be included in which slab. Okay. And although, let's first look at this. CGST means Central Goods and Service Tax. It is taxed within a state, intra-state tax. Like if the sale is happening, this can be looked upon actually. This is a foreign territory, state 1, state 2 and a UT. You need not look a lot into this, but it's simple to understand. Whenever a foreign territory, for a person, for example, if a person in Gujarat imports some good from foreign territory, the tax that is being imposed is IGST. Okay, IGST matlab IGST, Integrated Goods and Service Tax. Integrated Goods and Service Tax. It goes to central government. Okay. If one good is being manufactured in one state and is being sold in another state, again the tax that is being imposed is IGST, integrated GST. Okay. If the good is manufactured within the state and is being sold within the state, so CGST and SGST, central government ka GST and state government ka GST. Okay. Again, agar it is being sold within the state, CGST and IGST. If it is a union territory, so CGST plus UTGST. Okay, मतलब ये है कि if the trade and commerce is between the two states, okay, then it is IGST. It is, if it is between a foreign country and a state in India, it is IGST. If it is occurring within the state, so it is state GST plus central GST. And if it is occurring within a union territory, so it will be of course union territory ka GST and central ka GST. Okay, I hope you understood this, ki how and what kind of GSTs are imposed. Now let's look at how GST has impacted our fiscal federalism. Fiscal federalism means, what is fiscal federalism at the first place? Fiscal federalism means the right of the states and the center to impose certain kind of taxes. Okay? Because the fundamental of a government is money. How are you going to run a state or a country? Through money, right? And if you do not have taxation powers, so you can't run a country or a state. So Article 246A talks about the fact that legislature of every state have power to make laws on goods and service tax imposed by the union or by the state both. Okay, that means every state government shall have the power to make laws which can exclude or include any kind of good into a certain slab, or it can exclude from certain kind of taxation. Okay? That means state governments have a lot of power. They have equal power with respect to the GST law. Okay? The state governments have equal power as vis-a-vis the central government with respect to the GST laws. This is the main point of this Article 246A. Now there's GST Council. The chairman of GST Council is Union Finance Minister, and Union I'm sorry, Union, the Minister of State in charge for revenue, okay, he's the member. Finance ministers of all states and UTs, and the quorum is 1/3 or 1/2 of the strength, the total strength of the council. Uska 1/2 quorum hai. Quorum, you understand? Quorum is the basic requirement of a certain number of people that are needed to commence a meeting. ठीक है? To start a meeting. If certain number of people are not present, the meeting cannot be held. That is called quorum. Okay. And now all the decisions within the GST Council are taken by a special kind of majority. Now, it is important to understand what kind of decision making is being done in the GST Council. If we consider the total weight to be 100, okay, the total votes to be 100, okay, the central government has 33 votes and the state governments, all the state governments combined have 67% vote. Okay, understood? The central government has 33% vote share and the state governments, states, all the states together combined have 67% voting power. Now we'll try to understand how. Majority is 3/4 of the total weighted votes. Okay, 3/4 of the total weighted votes. Now if we look at this 33% and 67%, what is 3/4 of 100? 3/4 of 100 is 75. That means 75% people need to agree on a certain issue for the GST Council to pass a resolution. Matlab 75% of the people in this GST Council need to agree upon that decision that is being taken in the GST Council. Whereas 67% of voting power goes to states. Okay, and every state has equal voting powers. Okay, so all the states, if all the states agree and the center agree, then it is good, well and good. Otherwise 33% center agrees and some states agree. Okay, so it becomes addition to 75%. If 75% becomes, so the decision will be taken. However, it is important to remember that the decision taken by GST Council is not binding upon either the state or the union government. It is only advisory in nature. It can be only tendered as an advice. It cannot be imposed upon either of the government. Okay. I hope you understood. GST Council is very important. It is a constitutional body. It is a constitutional body. Okay. And the advice tendered by GST Council is not binding upon either party, matlab state government or the central government. And the parliament or the Supreme Court has said that the court's judgment is that both state and center has equal, parallel and unique powers to make laws regarding the GST. Okay. So it is good that GST Council will make recommendations, but still the state government have the right to make the laws regarding GST. Neither the constituents are dependent upon the other, and the recommendations of GST Council is not binding in nature. I hope you understood this, and now I will jot down the points that you have to look for the prelims perspective. Of course, because I hope the whole topic we discussed was through mains perspective as well as prelims perspective. तो यहाँ पे important है fiscal federalism. Okay, federalism. Second important point is what amendment brought the GST Act, the GST, ठीक है? What amendment brought the GST in India? Third is what is GST Council? Okay, what is GST Council? Its composition, okay, and voting powers, okay. voting power both of state and center, and majority, of course, majority is 75%. And fourth, the Supreme Court's observation, Article 246A, that is, the both state and center have equal, unique and parallel powers to make laws regarding the GST. Okay, I hope that will do for the whole topic, and that will cover everything under the umbrella.